Hello everybody, welcome back for another video. Hope you're all doing fantastic and that you're all having an absolutely incredible day. And without any further ado, let's jump right into it. You know what time it is. They're all over the place every single day. Someone by the name of Arthur Hayes is back in the cryptocurrency news. Arthur Hayes being famous, especially in over the course of the last year, for being like the go-to, source for Bitcoin and cryptocurrency price predictions and where the cryptocurrency space is going to go. A lot of times, his numbers are quite interesting in that he kind of really aims for the stars when it comes to prices. He's been in the news maybe 4 or 5 times in the last 2 months. BitMEX co-founder, his name is Arthur Hayes, is doubling down on his massively bullish Bitcoin predictions while forecasting that Ethereum could also, could actually go to over $100,000 per coin. Hayes says that the time to turn bullish on crypto is now, while unveiling a target of 100,000 US dollars per Ether, an increase of around 4,600% from where it currently is. The BitMEX founder also reiterated that he believes that Bitcoin will hit $1 million. This is a very common price prediction for Bitcoin. It typically has to do with the year 2032. The idea being that the world's economic system, I don't want to use the word has collapsed, but isn't doing as well. People around the world continue to look for alternative sources. They find Bitcoin, as we've also been getting news in the last, it's been happening for years. But we recently had news that there were 3 countries in particular that actually gave Bitcoin a brand new all-time high within their countries. I believe, I want to say Nigeria, Turkey, and Argentina. I believe that's what it was. In that, as currencies around the world continue to inflate, and many more than others, people are looking for a way to essentially save their money. So if you see that your paper currency has gone down by 100% year on year, and you see that Bitcoin has doubled in price, well, you end up choosing Bitcoin. And the idea is that that trend will continue not only for us, normal people in the cryptocurrency space, but also for everyone else who's just learning about crypto, and also for the millionaires and billionaires as well. This is why when we get into that discussion, about 93% of all the Bitcoin being held by the largest whales and rich people around the world. Therefore, supply, demand, $1 million per Bitcoin. In a new blog post, Hayes further stated that as currencies, fiat currencies debase around the world, the smartest trade would be going long on crypto. We also had Kathy Wood. She says this literally every single week. So I would only assume that these people who've been in the market for a while probably believe in what they're investing in. According to the BitMEX founder, Bitcoin and Ethereum are crypto's reserve assets. He said, and I quote, he says that everything else to him is a beep coin. You know exactly what I'm saying. Besides Bitcoin and Ethereum, Hayes says that there are other opportunities that exist in the space to have higher returns at greater risk. This is also something that I've mimicked before. Understand that there are many coins that I do not like in this space. However, I do have to admit that mathematically, we see every bull run that if Bitcoin does a 3x, 4x, 20x, Ethereum does a 5x, 7x, whatever x, There are many other altcoins that you will end up hearing in the news that did a 25x. It is just because they have lower trade volume. It's a lot easier for them to be pushed up. I do not care for these coins, and I personally do not endorse them. It is more of a, we know that they tend to do well. However, there is a much larger amount of risk for these coins as they tend to be newer. They tend to be garbage, and they don't have any actual future, and they end up getting caught up in the hype cycle, if you will, of everything. He said, and I do quote, "Then we get to the other layer 1 blockchains that claim to be an improvement on Ether. Solana is an example. These all got beaten up real bad during the bear market. As such, they will levitate off extreme lows and provide great returns for intrepid investors. But they are still all overhyped. Me too, pieces of beep that won't overtake Ethereum in terms of active developers, decentralized application activity, or total value locked." I think you get the point. He likes Bitcoin and Ethereum a lot. Every time this person speaks, he's always in the news, but I mean, how do I say it? Anytime that anyone gives like a really strong price prediction, they end up being incredibly popular within the space. I'm, as always, extremely, very excited to see exactly where the market ends up going during 2024 and 25, especially where people are basically thinking that Bitcoin could have already doubled from its previous all-time high by the time we get to like November, December of next year, which basically would equate to all the other coins having already passed by their previous all-time high. That means that they've doubled and or tripled. If Bitcoin has done it, every other coin has done it as well, and then some. And then we still would have just about another year and or 9 months of a bull run if the same timelines end up playing out. It's always a 18 to 20 month time frame of a bull market. I don't know when Ether could hit 100K, but I mean, if crypto is around in the next 10 to 15 years, if we don't have a 100,000 Ether, I would actually be incredibly shocked just because of how things are going with that project. That's the Arthur Hayes believes that Ether could hit 100K and that Bitcoin is going to hit $1 million sometime in the future. And yeah, let's move on. Consistently, constantly, every day, institutions, banks, big money news, the Frankfurt Stock Exchange, which is owned by the Deutsche Börse, has included crypto into their strategic priorities for the coming years. According to what they're calling Horizon 2026 report, Deutsche Börse seeks an expansion of the leading position in the area of digital platforms for existing and new asset classes. The company believes that, in the future, there is, and I quote, "further growth potential for new technologies through the digitalization of existing or new asset classes," end quote. Hence, it intends to accelerate the development of its blockchain-backed D7 digital securities registry and build a trading platform for digital assets as well. This was something that was noted in the first couple of months of 2020, for those of you who missed what happened. What ended up taking place before Coco was that a lot of banks around the world, I believe there were hundreds of banks within the United States, but also, I think also over 100 banks within Germany specifically as well, who announced that they wanted to get into crypto. Years ago, something that's not as spoken about as much as before, but is beginning to rear its head back into the space, is the idea of digitizing securities and digitizing assets. The idea being, as no one wants to walk around with their diamonds or their rubies, I'm assuming someone listening to this has diamonds and rubies. walk around with them, you'd be able to essentially digitize them, hand them over to a bank for safekeeping, air quotes, and essentially you'd be able to walk around with your phone, with your wallet, with your whatever digital ID, and kind of have them digitized. It is believed that nearly everything with value or that people have value for will be digitized in the future, so that you yourself don't have to walk around with them, that you can trade them and sell them and buy them instantaneously as opposed to having to go through a very long process. This also comes down to the idea that if you remember, if you were here years ago, is like the digitization of like even like self-driving cars. This is like an old topic that's beginning to pop back up because a lot of banks are announcing that they're moving into crypto. They want a cryptocurrency trading platform, but now they're also talking about a platform for digital securities and things that they can also digitize and have a trading platform for them. The idea for the self-driving car, for those of you who were not here, was literally, if we have a self-driving car, you have one in the city, or you and 5 of your friends decide to put money into a pool, you all buy one together. You could send it around the city and do Uber with it. And every single time that someone paid, you basically would all receive an equal share of that money. But it's the digitization of that item on a blockchain to show that you all have literal equal slices of pies. I was looking for something that I could like slice for each other. But now we're seeing once again this like become a topic once again as the world seemingly reawakens. The digital asset platform will serve only institutional investors and facilitate tokenization, trading, settlement, and custody services for securities, alternative assets, and cryptocurrencies. The report mentions stablecoins and central bank digital currencies, although their status on the platform is not specified. Yeah, we're seeing a lot of this once again. This one says, it says Horizon 2026. I'm not sure if that means we will have it in 2026 or we are looking to start implementing this now because the horizon is 2026 when we expect all of this to really take off. But I'll say this and then we'll move on. One of the really weird things about the idea of digitizing everything is that like literally everything could be digitized. You might remember during the like mega height of the NFT market, we started getting news stories that there were a lot of like museums that were selling Picassos and selling these other pieces, but they were NFTizing it. Not the word, but you get what I mean. And they were selling off like one 1/10,000th of the actual artwork. It also becomes a bit dystopian because it follows the idea that as all the institutions right now currently are buying up all the real estate and buying up all the assets, that you in the future may not be able to own property or land, and therefore you would only be able to own a fraction of it. So let's say there's a company who owns a piece of real estate and they're selling it. And on the website, it says that they will always maintain 51% ownership of the flat, but the other 49% are up for grabs. So you and 49 other people, you all put in $10,000 and you own a fraction of the actual apartment. So in this way, you do own real estate, but you don't really own the real estate. So every time that someone who lives inside of it is paying rent and you own 1/100th of it, you would be paid 1/100th. And these things already kind of exist. They're not on what I would call reputable websites. And I don't know the actual legitimacy of these companies, but I have seen them out there. And this will become more of an institutional, like big money thing in the future. So yeah, get ready for a world where everything is like only fractionally owned. I had a video about that on Money Rules, I think sometime last year. Like people think it's a joke. Like people don't understand. Like when I say things, like understand that when I say things out loud, it's because I've researched them in some sort of way. Like the only reason why I talk about things in crypto is because I understand the cryptocurrency space. Understand that when I'm talking about, like, I follow the trends. I follow what companies are doing. I follow what BlackRock is buying. I follow all the land that Bill Gates owns. Like this isn't like a daily thing. Like I'm not like using my free time to scour the internet for all these things. But I watch tons of documentaries. I see even, remember, this was years and years and years ago, around the 2008 2009 crisis. The issue was that tons of people were buying tons of real estate since around 2001, assuming that the market was just going to go up forever. Everyone was buying as much real estate as possible. The home loans were all terrible, yada, yada, yada. And this is why I believe a large portion of it was actually manufactured, because the vast majority of homes that were sold were things that were never going to actually be paid off in the first place. These loans were given to people who the banks knew could not pay these off, and the money would eventually flow back to the bank in the first place, like the ownership of the properties. What ended up happening was, and you can find the documentary about this in Detroit, Detroit, Michigan. There we go. In Detroit, Michigan, they were showing how, like, months in 2009, after the entire crisis was happening, there were these firms and these companies who were buying up blocks, not one block, not two blocks. They're buying up 20 blocks at a time of all this real estate that was being bought from these families who they knew could not ever pay back this loan. So essentially, over the course of 3 years, the banks had basically received money monthly from the mortgage from these families who they knew could not ever pay this off. When they defaulted and the homes were left empty, you were able 2 years ago, I mean, albeit in very bad areas, you were able to buy some of these homes for literally $1 and the land on them for $1 as well. So they show that these companies bought up 20 blocks at a time worth of land, and they started building homes and like luxury property and stuff on top of them. When I talk about that there will not be any normal real estate for people in the future, of course there's going to be a company who's building new homes. We will, as the population expands, always need new homes and houses. So of course there will be new developments that you may be lucky enough to be able to run to actually get some of that sweet, sweet real estate. But the vast majority of people will not have access to that. This is why we see, and if you've been paying attention, when you look at new real estate developments, and like they're mainly all luxury properties, if you get a chance, like you can actually contact these companies and say, hey, can I have a look around? Because I'm an interested client, what have you. Especially if you are, of course. You walk around and you look at it and you see that they're selling studios for $500,000. That's incredibly price restrictive in the year 2023. Now imagine the year 2045, for the projections that we have, that BlackRock and all these other institutions will own over 90% of real estate that's currently available. This does not include stuff that you might have in your family that was passed down to you or that you plan on passing to someone else. But 90% will be institutionally owned. That means that studios in the future are going to be $800,000, $1.3 million. If you're lucky enough to spend $1.3 million, then cool, go for it. But for the vast majority, the other 90 or so percent of people, they're going to have to join hands with random people on the internet and buy 1/100th of a property. And they'll then be able to say, I'm on the property ladder, but they'll know in the back of their heads, you don't really own that. You own 1/100th of a property. Like, it's going to, these things are happening now. And I see a lot of times, even when I made that video on the other channel, I was reading through the comments because I tried to like engage with people in some sort of way, but most people are so mean to me. They were like, that's never going to happen. That's not going to be a thing. Why'd you make a video like this? I'm like, do you understand how the world is changing, how it's rapidly evolving? When you talk about that there's a digital, I'm trying to, blood pressure's rising. When you talk about that there's a digital asset that all these rich people keep talking about is going to go from 1 million to 10 million to $100 million, and we know in the year 2023 that they own 93% of it, what planet are you living on where numbers don't make sense? How can you actually hear that corporations, watch the documentaries, they're on YouTube, they're free. Watch the documentaries about corporate landlords. There's some places in certain states, especially in the States, like, because, you know, the U.S. news tends to dominate a lot of things. The amount of real estate they're buying like 15,000 homes per month. This is one company. And there are like dozens of them who are buying 15,000 at one go. There are also smaller companies who are only, air quotes, only buying 5 to 10 places per month. That adds up very, very quick. It's happening in Europe. If you get a chance to look at what's happening in Africa right now with China, yeah, they're literally, for those of you who don't know, I'll give you the quick rundown. China is basically telling a lot of African countries that they'll help them build out infrastructure. We'll help you build rail, high-speed rail. We'll help you build cities. We'll help you build supermarkets. All these things that you need to basically look like New York. Just pay us back over the course of 30 years. The people just analysts in general have gone through the numbers and have gone through the contracts, and they've looked at it and they're like, no one could actively pay back that money. Do you know what happens at the end of the 30-year period if you can't pay back that money to China? China gets that land. China gets that city. China gets that infrastructure. It's basically theirs. Everything is in motion right now. It's actively happening right in front of us. And people keep pretending that it's not. This isn't to scare you. This isn't to so-and-so. But so many times I meet people. I have conversations with people about money, about investing, about all these things. And I tell them and they're like, that doesn't sound real. Really? No, there's no way. Like, lawmakers would never allow that. And I'm like, what planet do you live on? Were you just born? Do you not understand how these things take place, that they've been happening for hundreds of years? But because of technology, it's hyper accelerated. Rich people don't want normal people to have assets. They want everything for themselves. They want to constantly be in this upper echelon of the world that no one else can enter. It's a game to them to acquire as many assets as possible. If it wasn't, we wouldn't have people on the planet worth $200 billion. Do you understand how big $1 billion actually is? And then to multiply that by 200? They want everything for themselves, and they are going to have it. We've had this conversation before. I don't have to keep, elaborating on it, but it's like, I don't get how people don't really understand what's going on. We're going to have this conversation once again, I promise you. We're going to have this conversation once again when the crypto market is ripping and roaring in 2025. About other stuff I told you in other videos, I was like, buy land, buy a studio apartment, own something, own an asset that all these rich people are trying to buy, because it's going to get real. It's already real, but the general public doesn't understand this accumulation that's happening. They don't get it. They don't really understand how much, and I don't really care for the term wealth, but how much wealth is being created, how much wealth is being siphoned at the very top. It's a bit nuts. Anyway, completely got off topic. That's the Frankfurt Stock Exchange has Horizon 2026, and they're basically going to have a platform for digitizing securities, cryptocurrencies, and making a digital asset trading platform. Look into all these things. This is why I always say, if I say something ever that sounds crazy, Google it. Look it up. I've gone through all this for years. I'm constantly reading all this news about how the world is changing, and I have so many friends. I have so many friends who don't invest. You know how sad it makes me? You wouldn't believe the amount of people I have in my life who I tell all the time, please invest. Please put money away. Please save money. Please invest in something that makes you happy or that sounds fun. And it's been like 10 years, and I got like 4 people onboarded. It's crazy. It's absolutely crazy. That's the Germany news. Okie dokie. Whew, out of breath. Okay, let's move on. Also, I think this was supposed to have made us happy. I'm not really sure. Stablecoin issuer Circle is reportedly planning on going public within the United States in early 2024, joining the likes of Coinbase among core crypto companies that have gone public. Currently, discussions are said to be ongoing in preparation of getting a potential initial public offering. So normally when there are companies within the cryptocurrency space who go public, it tends to make big news Coinbase, Kraken announced before that they were thinking of going public. We still have rumors and news of Ripple going public. I assume they're waiting for the end of the lawsuit. The idea tends to be that like the value they create will kind of like benefit their coin and or anything else related to them. I'm not really 1,000% sure. But upon like Circle is a stable coin issuer. So there's nothing. I don't assume the majority of you are going to go out and start buying stable coins in anticipation of Circle going public and the stable coin maybe hitting $1.02. However, this was incredibly popular. It could just be generalized optimism of another company in the cryptocurrency space going to be in the public eye, and therefore this is beneficial for the cryptocurrency space. I'm not sure. Bloomberg reported that the company was internally discussing the same currently, indicating a lack of certainty about the timeline. The company is talking to advisors as it prepares for a potential initial public offering. I hope they do everything right, because at the moment the SEC keeps following every single company who ends up going through all the proper channels and then gets them in trouble about a year and a half later, saying that they shouldn't have been doing something. But that's neither here nor there. So fantastic. Circle is talking about going public. This was very popular news. The only people that this is going to benefit are the people who actually issue the stablecoin and or their investors behind the scene, as they all take a portion of the transaction fees for their stablecoin. So this will not benefit the general public, but this news, the cryptocurrency space has a thing where like the news that you think won't be popular ends up being the most popular news of the day kind of news out there. So fantastic. Whoa, can't believe it. Stablecoin issuer going public. It's almost like this has been planned for a while, because, you know, that's how the space. Oh, well, fantastic. All right. That's the USDC news. And yeah, let's move on. For those of you who haven't been paying attention, the NFT space has begun to revive. I know a lot of you had counted them out and weren't buying them when they were like $2 over the course of the last year. But for some reason, the market's moving back up. NFT sales have begun to skyrocket. And as such, we are seeing the beginnings of the 2020-2021 madness that we saw within the market. So for those of you who don't remember, some of the first NFTs were selling for like $1 or $2, and then they ended up going up to like a couple $100, and then eventually some of them were selling for millions. So we're kind of like, at the very beginning stages, but it's happening all over again, especially if you use Vivi and you see that there's not a lot of stuff left and you're paying attention to all the other projects out there. Regarding Bitcoin also has their own NFTs. And earlier this year, they were all the rage. Everybody was talking about them and they were going for sky-high prices. The interesting part about Bitcoin NFTs is that they're actually written, air quotes, on top of Satoshi. So you take a Satoshi, I always imagine it as a grain of rice. It's kind of the easiest way to remember it. And basically, you write your NFT on top of it. It can be a line of text, it can be a photo, it can be a video clip, you name it, whatever you want. It can be a book. People are writing things on top of these Satoshis. In the world of Bitcoin NFTs, people go a step further than the Ethereum, Polygon, Immutable X ones, and people start looking for value in time. So people have begun to find and look for and have scoured through Satoshis that they believe were owned by Hal Finney or were mined by Satoshi, because it's believed in the early days of the first couple of months, he was mining a huge amount of Bitcoin to get the system going. Disappeared, and a lot of these are actually on the open market, but people are looking through. So like you can tell like when a coin moved. If you've never used like a block explorer, you can see like this coin moved in 2021. This is how we get the news of the vast majority of people holding Bitcoin are not moving their coins. that's how we kind of get that news. So people are looking for these 2009 coins, and they're splitting the coins apart into Satoshis to actually, little grain of rice, and actually putting NFTs on top of them called Ordinals. Within those grains of rice, some of them are apparently supposed to be extremely rare and are believed to have been used at some point by Satoshi to do stuff. So it says through the ordinal focus, something called Rare BTC. I think it's a website. I'm not really sure. They apparently brokered the sale of an NFT or an inscription numbered simply 76. This one Satoshi, that one grain of rice sold for 1.7 BTC, which is equivalent to 61,000 US dollars at the time of the sale. I told you, like, the mania is beginning once again. Someone paid 1.7 BTC. That's 170 million Satoshis for one Satoshi. The sale is indicative of the active interest and perceived value in the ordinal space, with Rare BTC positioning itself as a key player in the market for those distinctive Bitcoin-based digital artifacts and unique Satoshis. The Bitcoin ecosystem saw ordinals generate a craze earlier this year between May and June, with trading volume nearing that seen Ethereum. Something similar to Ethereum. We also had news about 10 days ago that apparently Bitcoin NFTs actually overtook Ethereum NFTs in activity. Like, there are now more people using and dealing in Bitcoin NFTs as opposed to Ethereum. It says after a somewhat dull summer, ordinal activity is back and already nearing the highs seen in May. Notably, yesterday, public ordinals trading volume in the preceding 24 hours surpassed Ethereum. There we go. That's what we were talking about. And then they have, this is apparently the, wait, is this it? Or is it just nope, I think this is it. Inscription number 76, the one that sold for 170 million Satoshis, apparently says, congrats on ordinals. Seriously. And this was said by Vitalik Buterin. I don't think people really understand exactly how crazy this market is going to get. I've mentioned it before, and I know for a lot of people, it's going to be their first real bull run. You have no idea what's coming. Like, you really can't begin to expect. Like, we are more than likely going to have news stories that there are going to be Satoshis, NFTs on top of Bitcoin that are probably going to be selling for millions of dollars. And it's not that I'm trying to warn you, but just understand that, like, the mania is going to get very real. It lasts for a very long time. It's typically 18 plus months. And I just don't think a lot of people are ready for how high prices are going to go, how much money they're going to make. That's not a lie either. Like, I don't think people are actually actively prepared for it. But yeah, so ordinals are back in the news, as they have been for the last couple of weeks. But we now have gotten to the point, I understand it. Like, I can read English. But the idea of spending 170 million Satoshis on one Satoshi is. Yes, I do sincerely hope that you have all enjoyed. I do hope that you all are having a great day, morning, afternoon, evening, wherever you are, wherever the heck you might be. I do hope it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and or supporting. And I will most certainly be talking to you all soon. See you.